you have it, the closing bell from the New York Stock Exchange. National economic news swung the markets today. The Dow ended the day down over 500 points after this morning's CPI report showed a larger than expected rise in inflation.
The Nasdaq and S&P 500 also took a hit. Both indexes dropped around 2%.
Joining us now is Steve Odland. He is the CEO of the Conference Board and the former CEO of Office Depot and AutoZone. Steve, great to have you with us. So, rough ride today for the markets, and inflation hit its highest levels since 1982. What impact is this specifically having on the markets and on businesses in the U.S.?
Yeah, I think that, the question is, what is the Fed going to have to do to put the genie back in the bottle here from an inflation standpoint? 7.5% year over year inflation, the highest in 40 years. The Conference Board just did its quarterly CEO confidence index, and we found that for the third consecutive quarter, large company CEOs' confidence has dropped dramatically. And the reasons are inflation, the labor shortage, and still the unknown about Omicron and whatever else is to come to us. So, but this inflation issue is damaging CEOs' confidence, and I think it's all tied into this whole wage price issue. Economists refer to this as the wage price spiral, and it can get out of control and it can be serious. We're not sure we're at that point yet, but clearly we are in a situation where prices are going up, wages are going up, and the question is, where does this end?
Steve, as you said, your company, the Conference Board, has released the findings of its National Measure of Confidence survey today. What are some of the biggest takeaways from this report?
Yeah, I think that this inflation issue is new, right? It was thought of as transitory earlier in 2021. The Fed said that, the administration felt that, Congress felt that, and in fact, it is turning out not to be transitory. And that's what we're hearing from the CEOs. They're saying, look, this is going to be sticky because you've got the supply chain issue, which still has not fixed itself. It's going to be probably another year before we catch up with all of the supply issues. That's creating shortages, which is driving prices up. You've got the whole issue around chips, which is contributing to that, computer chips, and that is not fixing itself soon. You've got gasoline at a highest level in years because of a supply issue as the economy rebounds. And then you've got wages going up. And all of this is contributing to price increases all through the supply chain, up and down the supply chain. So CEOs are very concerned about where this goes. You can't price, infinitely here. And every time you price, you raise the cost of living and wages need to adjust. And then you've got this shortage. You've got an historic period of time where, we used to think of 5% as full employment. We're down at 4%. We are projected to go down into the threes. That is an extremely low level. We still have about 3 million workers sitting on the sidelines from pre-pandemic levels, the majority of whom are women and dealing with elder care issues and child care and family issues. So you've got that. And then finally, you've got the baby boomers who are retiring early and at a much more rapid pace than expected because of the pandemic. So all of this is creating an historic labor shortage. Wages are getting bitten up, and all of that is contributing to this spiral of inflation.
And Steve, you mentioned all of these factors as well as contributing to the overall lack of optimism from some of the CEOs of the nation's largest companies. But I'm trying to square that with what we hear is a very strong economy, that the underpinnings of the economy are strong, right? People are continuing to buy. The supply chain issues are partly due to the fact that there is so much demand. So it's almost like two sides of the same coin. You hear that the CEOs are not optimistic, but yet you also hear that the economy is on fire.
Well, the economy certainly is on fire. Remember, this was not like the financial crisis where there was big underlying problems. This was a deliberate, the economy was growing very rapidly. And we shut the economy down because of the pandemic globally, and now we're starting it back up. So we have all of this catch-up going on and all of this demand from that. So it's not the same as a financial crisis. Remember, in the financial crisis, asset values took a big hit. The market took a big hit. People were feeling poorer and didn't have the money. That hasn't happened here. Today was a down day, but we're within 5% of all-time high, 6%. It's still hanging in there, and so consumers have the dollars to spend. It's creating an increased demand, and so the question is, how do we get this supply back in shape such that we can help ameliorate the prices? And then how far will the Fed go? They're going to taper here on their balance sheet, but the projections are for 4 rate increases this year, total of 100 basis points, and into next year. So CEOs are telling us that it's going to take deep into 2023 before we have some sense of normalcy.
We're all ready for the supply chains to improve for sure. Steve, 83% of CEOs say they are struggling to hire qualified new employees. Meanwhile, first-time jobless claims are down for a 3rd consecutive week. What's going on here?
Well, I think if you take that 3 million number, the number of workers who are still out of the workforce from pre-pandemic levels, you add to it the number of baby boomers. Baby boomers have been retiring right along, but a lot of them were concerned about the pandemic, concerned about commuting, concerned about an office environment or a working environment and getting sick. Because there still are breakthrough cases, and so they're taking themselves out at a much more rapid pace. At the same time, as you said, which is an important point, the economy continues to grow and has come back to levels that are greater than pre-pandemic levels. So we need the workers. Further, we've got a broken immigration system. Immigrants provide about 1 million new jobs, 1 million new people for jobs a year, but the H-1B visa system is not providing enough supply. So all of this is contributing to a lack of supply at the same time that the demand for labor is quite high. And so companies are really bidding up the prices here. And that's a big contributor to the inflation number.
And quick question before we let you go. Are companies seeing this demand for workers on all levels, like from the highest levels on down, the most skilled workers to the least?
Yeah, they're seeing it all over, but the greatest beneficiaries have been the blue collar trades people, where the shortages are particularly reduced. I think that there's some clear solutions here that companies are going to have to implement, including continuing to stay virtual or at least hybrid post-pandemic, where you're able to access labor pools and resources around the country and around the world, and hopefully get the kinds of skills that you need, but also training, hire for culture and then train people. And so we used to screen for education levels, and I think we're going to be screening differently in the future and building skill sets, because it's clearly these skilled labor positions that are going wanted right now.
All right, Steve Odland, thank you so much for joining us. We really appreciate your perspective. Thank you.
Thank you.